Alright guys, welcome back to my channel, and in today's video I just want to show you, I want to teach you something really different from the normal things I've been seeing. And today is like a today's topic will be on the CRT technique, that's the candle range theory. So it's still a kind of ICT strategy and it's on Euro card. So there is how we do this analysis here. Is I'm doing this video for the sake of, or for the reason that I've been teaching liquidity for a very long time, and I want you to see like an example, because in the last video I posted on liquidity, I also said I'm going to show you an example of how you should be able to take a trade and every other thing. So this is what this video is going to consist of. I'll explain the CRT method as a whole, then I'll explain it as a kind of liquidity strategy, because it's actually more of liquidity. Yeah, it's actually more of liquidity. So let's go into the video how I got this entry. Now in my liquidity video, I have a playlist here where I talked about liquidity, and I said something about liquidity, that liquidity always give rise to impulsive move. After a sweep in liquidity, you want to see price go to the opposite direction, and there is no impulsive move without a sweep of liquidity. So if you've not seen those videos on liquidity, I have them in my channel. There's a playlist that consists of the videos. Now, for the candle range theory technique that I want to explain now, in that technique is a daily. You want to come to a daily time frame. This is how the analysis is being done. You want to come to a daily time frame, then you want to see a sweep in liquidity above the previous day, candlestick, and look at it. You should see this candlestick here. This is the previous day candlestick. Okay, this is the previous day, and if you can see, like, liquidity was swept like from the previous day 2 days, about 4 days backwards. So we have this overall liquidity to be sweep from like 4 days backwards. So enough liquidity has been swept above this high. I know it's not a long sell trade, it's just a small retracement I'm actually trading. So the price have not completely turned bearish until we break this low. So if this sell actually breaks this low here, then I will now be sure that we are completely bearish. But for now, I'm actually trading to a particular level, so I'm not a swing trader. I'm not swinging this trade. So let's quickly go to the 5 minutes. Yeah, and I said something in my liquidity videos. For you to be able to enter after a liquidity, you want to have a confirmation. And now, what is your confirmation? Your confirmation is a shift in market structure. And on the 5 minutes, we have a shift in market structure. Yeah. Why I enter this trade now is because I can't really find any important point of interest here on the 15 minute, aside from this fair value gap. I also did videos on fair value gap, just in case you don't know what a fair value gap is. You can still go and watch for more videos. And on the 15 minutes, we just have a market structure shift here. It's low, so we are actually going bearish. Yeah, we're actually going bearish. So where do you think I'll have my stop loss? My stop loss is going to be right above this high that serves liquidity, right above this high. Although it's too much. So I want my stop loss to be in this point of interest, so that if at all price retraces to this point of interest, I can wait for a new confirmation on the 5 minutes so as to enter again. So that's what I'm going to do in order to mitigate risks, because I want to be in the market. I want to notice the whole price action playing out around my point of interest, because there are many things that can go wrong in your point of interest, and all you have to do is to be in the market to see the price reaction. So it can be an impulsive move into your point of interest, which is simply going to break forth from your point of interest. And if you're aware enough to be in the market, you'll be able to sight what is going on, then know if market is actually trying to take a new turn. So that's why most times my stop loss is always around my point or slightly above my point of interest, so that I can be aware of a new change in market structure, a new direction, if actually the market is going to change in new direction. So I have my stop loss in place. Then where do you think my TP would be? This is a long-term liquidity, but price can be funny most times and not really come back to this high level of liquidity. But let's see how price is going to react to this liquidity level. And let me just stop here. Back to the CRT entry model, you want to see price sweep liquidity above previous day highs. Then after sweeping liquidity, you want to see a confirmation from the 15 minutes, or sorry, from the 1 minute. If it goes as low as the 1 minute, if I take this thing out, as low as the 1 minute, this is where I have my market structure shifts as low as the 1 minute here. And if you're early enough, you would have been in this market as at that 1 minute entry. You would have been in this market here. But since I just saw this setup now, I'm entering here. placing the stop loss around the point of interest on the 15 minutes, which is a fair value gap, and I'm expecting price to deliver to my TP. The TP is on the 1 hour time frame. If you look at the 1 hour time frame, this equal low. So I taught this in liquidity, how this is a type of liquidity. This is an inducement here. Look at relative equal low. So I'm expecting price to react from this level. So if you don't know how to identify liquidity, you might not really have a good exit strategy. So this is where I'm gonna want to exit price from. Yeah. So that's just it, and I'll wait for the outcome of this video. So if you've not really subscribed to my channel, please do well to follow for more videos. I teach more on ITT concept here. So let's see what this trade have for us here, and I'll update you guys. I always update you, and as a trader, you should be able to identify market should I call it market display. You should be able to know what is going to happen in the market in order to keep you safe. So just like we know that this is an imbalance here, so instead of panicking when you see price react to this imbalance, due to the fact that you know that price is going to react to this imbalance, it will help you minimize your your panic level, your FOMO level. You see, this is a huge imbalance here, so we are expecting price to react from this 4 hour FVG. This is an FVG. You can still call it a breakaway gap. So this is an FVG that we want to see price react from here. So it will be a little bit of disturbance in price around there before you can further push to take profit. So I'm anticipating a retracement, like a disturbing price action on the lower time frame. Just know what you want to see, expect them, and allow it to play out. So that's just what I'll be looking out for. And yeah, let's just see price sweep liquidity. We want to just see price sweep this overall liquidity on the 4 hour time frame after taking out this other liquidity. So that will be all for now. Let's see what price have for us, and I'll get back to you guys.
Alright guys, this is the video here. Just like I said, we are going to bring back the result of this trade, and look at what really happened here. If you check here, this my told you guys was to wait for the sweeping market of liquidity above the previous day high. And if you're looking at it from here, the previous day high, we had a sweep of liquidity, and the next thing which I did was to go for a lower time frame for a confirmation in line with our directional bias, which was bearish, and I saw it, so I took the trade. Remember guys, I told you that I'm expecting price around this my range, yeah, this box, and I'm going to enter a new position if price should fill up the imbalance, which price actually did, and I was able to enter this position again. Then if you look at 1 minute where I had the second confirmation, look at 1 minute. So when price came back into my point of interest in the 15 minutes here, I had my stop loss here, and price took out my stop loss around this level. So price came here, it gave me another confirmation, which was the mini market structure shift here. And if you look at here, this is where I had the other market structure shift on 1 minute. So just like I said, after a market structure shift, you want to see a retracement. So on 1 minute, you get this early market structure shift, which is this one. Then on the 5 minutes, this is like a break of structure, aligning with the previous market structure shift I had here. So this is the previous market structure shift. So as price retrace into your point of interest, you want to see a market structure shift to the downside, telling you fully well that you're ready to go bearish entirely. So this was the early market structure shift I have here, this first one. Then this was the second one, like a double confirmation that price was going to go bearish fully. Then we had a retracement back into a level. I told you want to see a retracement first before you enter your trade. So as at this level, I then entered my trade, and look at guys, on the 30-minute or on the 1 hour, we are almost close to take profit, which is the previous or the recent liquidity level. Just like I said, from a liquidity zone to another liquidity zone. That's how the CRT model works. Alright guys, this is what the trade looks like here on TradingView, and this, I mostly do my analysis both on TradingView and MT5, but I saw the setup on MT5 and I quickly entered before even coming to analyze on TradingView. So this was it here. Sometimes I do come to TradingView for comparison sake, because most time I don't really have a clear view of the candlestick on the MT5 based on the differences in broker. So this was it here. This was where price took out the old day high, yeah, previously highs there, and this was where I had a shift in market structure. There was a sweep of liquidity, so I was expecting price to deep go into this fair value gap. That was where I placed my first stop loss. Then I told you guys I'll be waiting for a new confirmation, because price can actually want to act funny and go above this high before dropping. So I had my confirmation here around the 1 minute, just like I said in the video. If you check in the 1 minute guys here, you see that I have a confirmation before entry. So this was where I had my confirmation around this low. This was the new shift in market structure. If I should take out this box now as my point, this point of interest, if I should take it out, delete, You see that if I zoom in, you see that this is the place price broke this last low, causing a shift in market structure. And this is one of the reasons I told you that entering trade instantly is one of the best way of trading in forex trading, because you have your confirmation and you're sure about what you're doing. Because sell limit is more like a it's more like a guesswork. Yeah, because you're not very sure as at that time price is going to shift in that direction. Anything can happen when price gets to your range. So you want to enter it manually. So that's just it on this trade, guys. This is where I'm going to stop the video for today. And please, if you're coming across this video for the first time or this channel for the first time, do well to like, share, comment, ask questions on where necessarily you need. Thank you for watching, and please do well to subscribe too.